So basically, those who are currently on the speaker row, I need somebody to confirm that yes, you can hear me loud and clear, and also you can see my screen.
Yeah, I can hear you loud and clear. See your screen.
Okay, that's beautiful. So let's commence the session. As always, we'll be looking at gold, and I think I will try to give you guys a bit of scenario you need to understand. Recently, I've come to understand that you can trade anything. Anything works, right? So sorry, let me just say this. Anything works. You can trade any concept. The most important thing is not the concept you trade. The most important thing is the approach you use to trade the concept you trade. Right? So let's first start with top analysis. I rarely do this, but I do have an idea of where the market is headed on a higher perspective. Now, when it comes to trading gold, especially, you have to be very fast with fundamentals, right? War, investment, stuff like that. And what we see here is gold is heading for a mad push. Before ending of this year to next year, possibility of gold at 3,000 is very high. Gold at $3,000, right? So because right now investment on gold is increasing every single day. So gold to 3,000, very, very possible. Because now we already have a bullish close from last year, right? Remember, this is 12 months. So I don't know if this candle will be very aggressive, but we could see 2024, 2025 having gold get to 3,000. But this is on 12 months. So let's scale down to something more realistic, like the 3 months. All right. So you know how the last three movement down to the downside of this sellers level were always taking shots, right? I remember we taking multiple sell position here way back in 2020, 2021, right? I think this 2020 July. This is 2022. This is 2023, right? Market sold off 3 times. So after the third touch, you already knew that your market is going to definitely invalidate it. So I think what benefited me was I caught March low, right? It's always beautiful if you can catch the low of the month because you might just enjoy the direction to the upside, or if you catch the high of the month, like in this case, if you had caught the high of that month, right, you'd have enjoyed the move back to the downside. I think most person always complain that they prefer the white team, and I think because I'm going to upload this video to YouTube, I might just leave it on the white team, whereby everything is really, really clear, and then you can see it very, very bright. All right. So what we do see here is this is last range. The market mitigated on the 3 months time frame, which is a very beautiful mitigation. All right. And what we see here is the market actually bought from that level, right? Aggressively mitigates and bounce. And then right now, market is still buying. So I will tell you for a fact that possible entry lower, we could see price come back low, but price is never going to come back to 1987 if the buyers are actually going to continue keeping this direction. What we do see here is most people want to look at this, but it has been used already by this level here, right? We see that has been mitigated, right, by that candle. So that thought of price coming back there is cleared off. So right now, the only bearish candle we do see on the monthly is this one, and price is here to close above it, right? And that means March will determine the closure for that. Probably close above, and then we'll see price push back and then continue higher, right? That is on the monthly perspective. So gradually, we're seeing the idea of the market. Notice that this is the first time we are seeing this bullish candle. And if March should close bullish with a body above this line, that would be perfect. That would be the first candle with body close above 2074.98 on the monthly time frame. No candle has closed above that level, and that's like a very strong point to watch out for price. So right now, This is weekly. Let me bring that back to short our time frame. I don't know why this doesn't show our time frame. I'm sorry about that. Gray. Okay, so we have that on the weekly. This 6 weeks rather. Let me just go to the weekly. Beautiful. So now on the weekly time frame, I'm quite interested in certain areas like this, right? 2044. I actually want to see price come back there before we see that aggressive buys come in, right? This is the stop. Well, I don't see price going as low as that anyways, right? So first have this. We see that multiple mitigation. So there's one thing about stop loss. You have to understand that if price is going to buy, it should not go beyond certain levels, which is this area of already marked, right? This level here. I want to show you guys 2 weeks. I think I'll have to add that. 2 weeks. Let's see. That should be a single candle. Okay, but it's not the kind of candle I'm interested in. Let's see. 3 days. Okay, beautiful. I have that to this level, which is 2031 thereabouts. Next week I'll be looking for shorts on gold. I'll be looking for sell on gold. Today's date is 1st of March 2024. We do see that market closed. Market didn't close above this. Rather, it gave us confirmation for what buy side liquidity. So we do expect price to actually take this level off. 34. So I'm showing you how you do a top-down analysis. But now let's go the retail world. What do you notice here? The first thing you will see here is price has been pushing to the upside, right? We had it push here before it broke and then became bearish at this level, right? In which later on became a support when price converted back to the upside. And then next thing you see here is price has also done this, giving this move back to the upside. And finally, we want to look at this pattern that was created here, whereby we see this move, then we see this pattern, right? So it's more like saying the retail idea is for price to come back before continuing back to the upside, right? That's just the basic retail idea, and most persons are already familiar with that. So these are one of the things we want to look at because they're quite important. So moving forward, I like to keep the chart clean. Question becomes, where is the best level to buy from? For buy continuation, I want to buy at this level. As well as I do say that it's best to buy at discount, and then it's best to sell at premium. But you have to understand that most buys are sponsored by sellers. Most sales are sponsored by buyers. The reason is they want to push price opposite so that they can stack more position, right? So this is like a reversal kind of range. On the 3 days time frame, we're going to refine this better, right? On lower time frame. So if we go to daily, right now on daily, I will not be interested in this level again because price has utilized it. Now, if you see this, price has actually utilized it pretty much. This is the last bearish candle, mitigated perfectly, meaning my range now will be above. So there are a lot of factors I will have to consider first. I want to see what the higher time frame is doing, and then what the market is likely to do. Now, market is in a state whereby the buys are too aggressive. So trying to jump in on the buy is only going to mean losses, right? There's this trick whereby we look at the dominance of the market. And if you look at this, you see that week on the daily, that's the swing point. We have that week, right? So you have that as a swing point. If we was to scale down to the 23 hours, they just gradually go to the hourly time frame. We have that swing point. We have this swing point, right? So what we notice is price has been trading within this range, right? So we see this happen multiple times, Price goes up, goes down, goes up, goes down, just like that. So price go down again, go up, and stuff like that until we get to that level. Expecting like a bullish narrative, that's what I want to see happen. All right, it's as simple as that. Now, in that case, if I'm interested in buys from this time frame, right, this is what I want to be looking at. But then again, I want to see what 21 hours is saying, and then we have a bearish candle. I don't want to go lower. I would just want to stick with something that is very, very easy to take. Now, there's a trick for gold. Let me tell you that if you see an aggressive candle like this, right, just go and study this. If you see an aggressive candle like this on gold, no matter the time frame, and then you see one small candle, right, no matter the time frame, we just see one short candle in between, right? Gold will always come back to react from there, right? I've noticed that a lot. So you use it in the direction it has already given to you. Gold will always come back to come and react. If you read my thread on Twitter about supply and demand, that is hidden supply. That's what we call it, hidden supply, just waiting around the corner and all that. Okay. So this level is one area I'm interested in. So recently I added a lot of time frame, 17 hours also, if I want to see like a clear picture. Those gold trade I took, I mostly took my analysis from 10 hours. Then my entry was from 5 hours. So if I was to refine this, so the first thing is there's another trick which is a very popular tool most people ignore, fib. You see this fib is very powerful. If you come to 5 hours, if you use premium, just go to 5 hours, mark this and prove me wrong, mark that as your low, right? So let's say this is your low, this is your high, right? You want to get the entry, you draw your fib from low to high. What do you see? Market comes into what? 61.8%, right? And bounces back up. Now again, we want to do the same thing. This time around, this is our low, right? This is the low that was created, correct? This is the low. I'm talking about 5 hours time frame. Okay, 1 minute. So that's the low. Want to mark from this low to the high, correct? So where's the high? We have this as the high before the major pullback came in. Right, so you mark from low to high, which is this level. What do you see? You see a clear reaction of 61.8. Now, if you're just using this as a model of entry, you'll be making a lot of profit. It's something simple, right? See, put your stops there. Then you can even target that high, right? That's the 1-to-1, but then you want to look for 1-to-3 or 1-to-6 or hold it, right? The same thing if you did it here. If you did what I said at this level, okay, just place it like this. Just stop here. Then you could target your 1-to-3. So let's assume we're targeting 1-to-3 for all, right? It's quite easy. 1-to-3 for all setup. Okay, this 1-to-3, this 1-to-3. Then again, you do the same thing, high to low, high to low. Now the next level you want to focus on, this is the high, right? This is the high level. We'll mark that. This is the low. We draw the fib again from what? Low to high. Simple 1-to-3. Stops here. 1-to-3. That's a 3-hour setup. Okay? If you do that again, I'm just showing you how you can utilize it for pullbacks. You do it from this level, low. And in this case, this was your high. Yeah. right? You could have also gotten in on that trade 1 to 3, which is also quite beautiful, right? Simple setup, simple tool. I even did a video on this on YouTube channel. Most of you have not checked it. Secrets of Fibs. Just go check it and study it, right? So you say it's not so difficult. All within this range, you would have made a lot of profit. 1, 2, 3, 4. 3 hour times 4, that's 12 hour setup. Now, I think where most people miss it is they believe because it's 3 hour, it's not going to be much, but that's wrong, right? You need to know how to utilize most of these entries. Now, one thing I've noticed is when a level is too obvious, there's tendency market might not come back there. But then again, it doesn't mean you should totally ignore, right? So I also want to keep an eye here, but I would expect price not to go as low as that. So like I said, the momentum kind of movement I was explaining, this is a perfect example of it, right? Whereby you see this level and then price does what? Come back to it to push back to the upside. Even if you check on lower time frame, you could also see candles like that. I think from 1 hour, or even from what I call it, higher time frame. See this also whereby it happened here, right? So that pattern really works on gold, especially when it's found within a certain level of momentum, and that's like the only candle there that is not giving that momentum either to the upside or to the downside. It's quite simple. It's just something you have to train your eyes to see. But I want to focus on top-down analysis for this video, and let's focus more on 5 hours time frame, because this time frame, one of my friends introduced me to using it recently. It was like, guy, check this 10 hours setup. We were having a debate on gold, and he just said his analysis. See what I'm saying. Check 10 hours. I'm like, 10 hours. It was like, then check 5 hours. You see the entry I'm talking about. And I really looked at it. I took myself off 5 hours. I could basically wait 5 hours for one candle to close and say, okay, you know what? Yeah, that's one candle that just closed. Now, if you see here also, that candle I just talked about, you see it again here, right? The thing is, gold, if you can actually train your eyes to see some things, you won't take unnecessary losses. This is one of the entry for shorts on gold. I'll be looking at this level here. I'm going to extend that 1 minute. Okay, so that is it. Oh, I think it really invalidated it, but price is still within the supply, which is this swing high. I want to see if price is going to clear the liquidity or just sell right off immediately. But I do want to see what lower time frame will show. And I think one very important thing to note is that for this buy to happen, sales need to come first. So I could say, let me raise 1,000, just take the short, then expect market to just sell for a short period of time, and then look for buys for swing. But I want to leverage on these shorts. I want to get confirmation before I actually look for sell, then look for buy to sell, or sell to buy rather. Now the candle is closing. The candle closed bearish, right? But when market opens, we could actually have this candle push up. Right? We could have a candle push up or a candle push down. Either of the two is possible, right? It's quite simple also. I think most persons have said I say the word right too much. Don't blame me for that. I think just because I'm used to it already. But if we look at the major swing points here, we have this area, we have this area, we have these areas. These are the dominant levels of the market. Okay, if you look at it, the areas I've marked are like the dominant levels of the market. What we do see here is price moved, move down, move up, move down, move up, move down. Now I've moved up, so we need to move down a bit, and then before we continue back to the upside. So it's more like first, second, third, fourth, fifth, sixth, right? But most count starts from the top, which is 1, all right, 2, 3, 4, 5, 6. So this has already given us a change of trend. So in some of my previous YouTube video, I talked about trends and flats. Right, you need to watch it to know what I'm talking about when it comes to trend and flats. I don't want to waste my time on that. Okay, as always, I like keeping the chat clean. So like I said, best level to look for buys would be here. And if you're using your trend line, you'll see that that's like a breakout of the trend line. Market's still bullish, and then you would expect price to push back to the upside. Now, for those who prefer sell opportunity, you could always flip your chart. But if you look at it like this, what I do see is I see another level we could actually leverage on, which is this area here. I'm going to tell you why. This level also is quite important. So if I'm to flip it back, okay, what I do see is another zone to use for buys. Now, the reason for this type of entry, this is called a flip range when supply changes to demand, and this is FLB1. Then this is for the other buy type range 2. Okay, so we do have this possible narrative. Price could actually buy from here, or price could buy from the lower one. But indeed, probability of price buying from here is also quite high, especially if price just dips first, goes up, comes back, pick liquidity, and then push back to the upside. So these are cases whereby you want to understand that anything is really, really possible. And you don't want to jump into a conclusion to say, you know what, I don't think this might happen. I think that will happen and stuff like that. But having a clear picture, like we said, we started from our time frame, we see the market is quite bullish. If you scale lower, the charts start making sense a bit more better. You start seeing things you didn't see before. Now, within this level, what do you see? You see that this area we're looking at has been utilized. And then the best level to use would be taking it a bit above. And that's one of the leverage of using multiple time frame analysis. But if you just stick to one time frame, you might miss out on this. Rather than those who will be waiting for entry there, you are here waiting above. And what do you see? You see that entry is quite similar with the one on the left, which is this one, quite similar in setup in terms of range. Because of that, I want this off focus level. So I'm interested in short. I like to close indication for step level. So I'm interested in actually market, right? On the I just need to get a smart is going to continue come to one. Now, one thing that we could entry take can be on the first side of things. If helps the stop loss, that's too much. That's easy. Let's see this one more recognizable. Bring the 5 hours candle, 3 hours, and then give a much more refined entry with less risk. Risk is quite important. Max of 40 pips. So this is 62, which is on the high side, right? And now I said that word again. Oh shit! Don't blame me for that, bro. You'll be fine. You'll be fine. So we do have that, and as of last year, I had a pattern like this also play out. Something similar like this. Price never really came back here in that case also. So I will still not ignore it, but want to watch for what market is likely to do. Okay. So I have that. We could refine the entry will always get better. I do utilize weird time frames, trust me.
Okay, perfect. Now I've seen that candle I talked about, and that's one reason that I'll be so happy to use it, knowing full well that yes, price will definitely come back to this level because that is within a lot of momentum movement in the charts. I'll be ready for it whenever price decides to show itself at this level for buys. So I'll be interested in buying, and as well as 40 pips max. We could even get a much more refined candle. Let's see if we're looking at 23 minutes. I'm not interested in what I'm seeing. 22, not interested. 21, still not interested. 15 is taking me off. Let's see, can I get any candle more reasonable? I'm not getting any candle of sorts, so I think I might stick to what I just said, which is from, I think it was from 45 minutes. I'd rather stick to this setup, 45 minutes. Now, for the sell, like I said, I'm quite interested in the short. Now, this is for this, for a 10 hour, that would be 40 pips for 400 pips. Okay, so this is what we do have. Simple setup. Nothing so complex. Just group that for buys. That's next to buys, but I'm looking for short first. I think I marked something like that before. So let me just take one off. Okay, I also gave this before. This is on our Telegram channel. I posted this, said that we're expecting buy side liquidity to be taken so that we can expect the shorts. Right now, you see that we are looking to buy is still within that level down. So I do want to see price sell going back to 45 minutes. So now I'm focused on getting reason for shorts. And the best time frame to get the actual information on this level here will be to use lower time frame, because if I'm using a higher time frame, I don't really see candles there. Now on this time frame, I see different things. I see levels to buy from, levels to sell from, and I see that candle I talked about here, which I'm quite interested in at this level here. And because I believe if price is going to sell, price needs to start selling immediately from a certain level, and you can either take a loss or make profit. It's as easy as that. Because what we want to see something like this happen, and the simple 1 to 3 are in and out of the setup, and this is giving you like a simple rally, right? And then what happens? Breaks, creates inducement, break previous low. Want to see how market comes back and then push back to the downside. Easy and simple. With that in mind, you might want to target this and then put your stops just above this. How many pips is that? 16. You could even play it safe and do 15 pips. And then you have a simple 1 to 5 at this level. 1 to 5. Okay, 1 to 5. If you do want to swing it back to the demand we're interested in buying from, that's a nice RR setup of 1 to 20. All right, this gold swing I had was over 21 RR. Held the trade for 6 days from last week Friday to this Friday. That's one of the positions, right, for 6 days and 21 RR setup, which is beautiful, trust me. So I could even scale in lower. 5 minutes. 5 minutes, you will see more candles. So you see how we started from what? We started from different time frame. Okay, we started from different time frame, and that tells you a lot. We started from, I think we started from 6 months. All right, so the first thing we did was 6 months. We looked at 6 months. We looked at 3 months. We looked at monthly. We looked at 6 weeks. This is if you want to have like overall picture. We looked at 2 weeks. We looked at the weekly. We also talked about 3 days, talked about the daily, 23 hours, 21 hours. I looked at 17. So literally there are many time frames you could utilize. It's just your preference, right? Your preference is quite important. Then you have your normal traditional ones of 3 hours, 2 hours, 1 hour, right? 1 hour, talked about 90 minutes, 45 minutes, 30 minutes. Then the weird ones again, 23, 22. Okay. So literally multiple time frame, 21. There was a time I used 20, but then I've substituted that for 21. So I also use 15. I use 12. I use 10. Okay, then the traditional last time frame of 5 minutes, 3 minutes, 2 minutes. Okay, so these are like different time frames you could use. Now, if you see this setup I just gave you on gold, it's a very beautiful one. Right, very simple setup. I'm going to capitalize on it when market opens. Hopefully I don't forget about this setup, because I know even if it's not going to sell for that long, it would give me a 1 to 4 if I choose to risk 1,000 or even a 1 to 5, right? So let me just bring this here, because that pattern has repeated itself multiple times, right? Whereby I did this, I expect it to come back into this level. There's a range here, and there's also a range here. So if price wants to fail, now most time I will want to go for the extreme. I like to leave everybody to be trapped, and because of that, I want to play smart, right? I want to do the smart thing by going for extreme. Now, the reason why I go for extreme is because I do want to see a break first, something to actually give me confirmation that yes, market has given the shift to the downside to validate this sell move. And what better way than to sell first, pump to take out everybody selling, and then continue back to the downside, right? So this is like the basic example I want to see, and I want to then use the extreme range. Most time it's best I meet the setup than I take unnecessary losses just because I chose to be ignorant, which of course doesn't make sense, because if you know that there's a possibility of price kicking you out of this setup, right, why maintain that same bias when you can actually get a higher risk to reward ratio by doing the same exact thing you would have done before? All right, so I have this level. Stop losses literally 10 pips. All right, I think I could take it on 10 pips. No, I just want to cover that, so I might just leave it on 15 pips. But of course, you can get 1 to 5. See, that's a beautiful 1 to 5 RR setup. 1 to 5. If you risk 1,000, you make 5,000. Your phase 2 would have been passed. If you risk 2,000, you make 10,000. Your phase 1 would have been passed. Now I'm just saying, I want everybody here who are trying to short the market, because there are sellers here, sellers looking to short, sellers who are already shorting, just need them to take out these lows, and then they start feeling like, yes, market is going to use the next supply. What happens? Fails, push back, and then before we see this drastic move to the downside, right? It's quite easy if you do ask me. You just have to play the game. The game is who wants to be on the smart side. Do you want to be on the smart side? I hope I'm not really confusing you guys, because I'm just giving you the basic idea. But if you think this is wrong, you can always give your feedback or opinion. But just as you can see, this is one of the things I'll be looking at on this time frame. I want to see how price will utilize this level to sell from. All right, and more importantly, I can always check who is in charge of the market. See, I can tell you one thing: shorts are coming and price is going to sell. at least we should see 2049 again, 2050, right? So we're going to see 2050 again. So I could even be aggressive and take it straight to 2050. That's 24 RR. Or let's say the buy I had, where's the buy? The buy entry is around that level, right? So it's around 2052. So I could put this target to 2052, right? So beautiful. There's a lot of volume there. That's where we had a lot of sales converting to buys. And apart from that, this is 7RR setup. This 1 to 23. I might not even need that much, right? I might just want a 1 to 10. A simple 1 to 10. 15 pips to make 150. And one thing about gold can deliver 150 ASAP, right? So we do see this. I think I like the fact that this also shows us the date and time, right? Today is 1st of March 2024. You can see right there. I'm going to change that color very soon. I keep forgetting. Let me just leave it first. Let me leave it be. So this is what we see. Sellers first started with the move with this, and continued again with this. Now the next one was with this. So I need them to actually take at this level, then continue back to the downside. Easy peasy. If I was to check the last move, I will check like this. You see that there's a lot of volume there. The market might actually take out, and then we had a lot of shorts. Price pumped back, sellers are in. If I was to check this move, you see that level I also talked about, that there's volume there, right? There's also possibility of price selling from this area. But I always like to go for extreme, especially when I know the market's opening on Sundays. I don't trust what the market is doing or what the market is going to do. I don't trust it, and I want to play it smart. I play it very smart. Always, I like to keep my analysis clean. So this is what we do want to see. We do want to see this play out. And this is a 1 to 10. We could even expect price to go to 2052, like I said. That could be like an extreme target, 2052. Let me just show that. 2060. Price points at 2060. Price target at 2060. 1 minute. Okay. 2060. Price could go as low as that, also quite important. Price target 2060. So if we're to go to 1 hour, let's see, you see that level is reasonable. There's a lot of imbalance there, and the volume on this leg is quite high. There's a lot of volume also. 1 minute. So if I'm to plot again from this to this, so you see the volume down, right? So it tells you that price is even going to come to 2051, but I want to target 2050 first, and then we do see that this has been utilized already. This move was utilized. Then you see that nice mitigation here, which is beautiful. So you can really take advantage of any time frame, and this gave a clean 1 to 6.4. So I do want to see sales happen, but of course you want to get confirmations and all that to know that yes. Now if you look at 15 minutes, you see that this level I marked has actually been mitigated. So it's quite dicey to say price is going to sell from this area. But as always, you want to keep open mind. 15 minutes is good for those who love it, but for myself, I still like to stick to higher zones. So you might as well just take this full region here. It's not so bad. And then decide to put your limit like this. Rather than miss the setup, you calculate your risk. So if I also take 35 pips, say targeting to 2060, I think I should get at least 1 to 5 or more, even more, 1 to 7, right? Why be greedy when you can leverage the right way? Okay, you can always leverage the right way, and that way maximize profit than missing out on that setup. All right, so you see what I just did now. I maximize the opportunity by knowing that if I miss the setup, once price is gone, it's gone. So I could want to do this. I could also say, you know what, let me see what 12 hours is doing. Market, if market really wants to sell, I shouldn't see it take out this level. That's why I normally call it invalidation point. Okay. Invalidation point will just be sitting above there. It's as simple as that. Nothing so complex. Okay, so we have that. Sorry, I just like my stuff tiny and small like this. So what I'm saying here is, we could see price do this. Market might actually just want to come back here, you know, mitigate and then continue. But we'll be ready rather than missing the full setup. Just take it as a range like this, as I would mark out, because if I should come to 1 hour, that's just a range candle. If I should get to 30 minutes, I want to see if I can fish out the actual body candle. Good. This is the body candle, right? For that range, it's more like saying we're taking the full body for this level, which isn't so bad if you do ask me. And then we'll have that as the flip, the actual first range that was created, just like that. Okay, so we have that. We have this there, which is beautiful. We're just saying, give us that shift, give us a confirmation that yes, you really do want to continue short. Now on this time frame, we see it's better like this in terms of the shift, and you basically want to wait for price to come back into this level. So there's 35 pips max. Let's put it at that. Price should just react immediately, because if market indeed wants to sell, we shouldn't see so much push aggressively. So price should just come into this level as marked by this, and then start the short immediately. Just mitigate, then start selling. We really want to see the sell. This should happen by Sunday, Monday, right? That's like a corrective move. I have not checked yet, but it is fundamental. We'll always update it on our Telegram channel. So if you're watching this live recording from YouTube, do ensure you join the channel so that you can always get access to fundamentals. And I think we might also include fundamentals to the website. We're currently working on our Pip City website, so you guys should always be ready. So this is what I'll be interested in. So you see how I'm able to do analysis for both buys and sell. It's quite easy, not so complex like you would think. If we're coming back to 4 hours and I'll bring back the buys, you see it right away. Good. So I think I got the actual entry from 2 hours. I told myself I might need to start putting the marking on the time frame I got analysis. Okay, on this time frame, looks like I just took this candle. That means our perfect entry was from 45 minutes. Yes, 45 minutes, focusing on that candle. And then the buys are very, very low. Now, I've seen this move also repeat itself, like I said, 2023. Now, when it started the sell like this, people thought, you know what, it's not going to sell so much. And then what happened? Sell before the buy came in again. So I'm already familiar with most of the moves because over time I studied. And I think that's what has kept me ahead. It's not just because I know it, because I know that if I know this, I need to leverage on studying more to understand it better, right? So there's a lot of demand resting below. So if in the price needs to pump again, we need to take that movement from a very level. If we come to 17 hours, so this is also a strong level to watch out for. We actually do want to see that movement back to the downside. That's the first candle we're having push up aggressively. So there are different reasons why we should focus on this level. So just as you can see, it's not so difficult. This is how I normally frame my buyers, top down, right? It's quite simple. This recording will be posted on YouTube and the link will be shared for those who missed this session. Right, it's a live session, so we see this happen. So I also want to see this happen. Now, even though this supply is going to be invalidated, right, because we have this move, right, this move like this, create this, gave inducement, came back, call liquidity, swept liquidity here, came back, and now price has pumped above. Now, even though it's going to break, it's going to act as a reaction point before breaking to the upside. It's as easy as that. Price definitely reacts from that level, and then you know what, pump back to the upside. Now, if market doesn't react aggressively to the downside, you should see at least a short form of reaction, but definitely market would react. Right, so we'll see price reacts from that level into this level, and we had that already. Like I marked out, we had this happen, right? Market create highs and lows. That's how you guys would call it. But now we just focus on understanding what structure is doing, which is basically creating trends and what flats. So act as reaction before invalidating that level, and then pump it back to the upside. It's as easy as that. All right. So we do want to see this happen. All right, and we don't want to be blinded by one objective or one opinion. So be free. But for me, I'm going to look for shorts next week. It's going to be sell to buy, because I do know that market will continue higher. Right, market is going to continue higher, but at the same time, you really want to know where you're buying from. And before you buy, even if you're wrong, if you buy from here, you can never go wrong. Just put your risk, even if it's going to take a while. Then 1 to 3, right? But the idea of lower time frame is to get a better risk to reward ratio, right? That's so much for a risk. You could even go as low as saying you want to just focus on this bear candle here as 1 to 7, right? But I know that between now, March might actually end up bearish. You can never tell. I think seasonality is showing that March is going to be a bearish month. You can also not tell. Price could actually pull back here, react, really come back to sweep this liquidity before actually selling and then closing bearish. I think April is bullish for seasonality, right? But then again, these are levels that price might possibly come back to in a long run. You can't really tell. But I think if I should go to my study on the daily time frame, I do mark out all the major points that gold is possibly ever going to react from. All right, so you can see it on my screen, right? Most of the levels that gold reacts from. So now that we have actually broken through 2050 or broken through 2075, now the next level is 2100. That's 2100. But we need to get a move that will sponsor that, and that's where this comes in, right? Before we get there, probably react from there and start selling back or something before coming here and then continue back to the upside. So any of this scenario is quite possible. You just want to keep like that open idea when it comes to trading gold. So it's not so complex, not so easy. It takes a ton of work and it takes time for you to understand what you're doing. Now, but the idea is if you keep practicing, you're going to get a full-blown understanding. You can learn it easily. I won't say yes, it will be easy, but doing it consistently, even though you're taking losses or making profits, that's when you see the benefit of the results. And then you definitely benefit from it when money start coming in from what you're doing. So I'm sure this session was not so complex. We stop the recording now. And if you watched up till this moment, do ensure you hit the subscribe and you share the video rather.